For decades, the golden rule for small country investors has been index and chill. By the S&P 500, ignore the noise, and let global growth do the work. But as we move through 2026, that strategy is no longer a passive safety net. It has become a concentrated geopolitical gamble. Let me explain why the US-China-Russia conflict is now a systemic risk you can no longer ignore. For the first time since the 1930s, we are seeing the weaponization of the index. The S&P 500 is no longer a proxy for the world economy. It is a proxy for the United States' ability to win a multi-front economic war. In early 2026, we've seen average tariffs climb above 14%, levels not seen since the Great Depression. At the same time, strategic simultaneity between Beijing and Moscow has created a permanent alternative economic corridor. Russia provides the raw resources, and China provides the high-tech manufacturing. This has forced a selective decoupling that hits multinational corporations the hardest. If you are holding a standard global index, you are likely 70% concentrated in dollar-denominated assets. You are betting that the US can maintain its convenience yield while its debt levels continue to spiral. But look at the smart money. Central banks are moving toward gold at a record pace, with price forecasts now reaching $6,300 per ounce by the end of this year. They aren't just buying gold because of inflation. They are buying it because they are de-risking from the very index you're told is safe. For an investor in a smaller economy, your local currency and your local markets are already sensitive to these shocks. By indexing into the US heavy megacaps, you aren't diversifying. You are actually doubling down on the volatility of the superpower conflict. When the S&P 500's largest tech companies face export bans or their P multiples get re-rated due to fragmentation, your passive portfolio takes a direct hit. The conflict isn't just a headline anymore. It's a structural shift in how value is captured in a tripolar world. If the world's most powerful central banks are actively moving their wealth away from the current system to protect their sovereignty, what does that say about the safety of the index you're holding? If your entire retirement is tied to a system that the world's superpowers are currently trying to dismantle, who is actually in control of your financial future? Follow or subscribe and stay ahead of the shift.